Yes. So you're probably watching this video right now because you trade Forex, but you're looking to switch to futures because maybe you was dealing with a prop firm and they screwed you with payouts. Because I remember reading a comment, someone said that they lost $20,000 when it comes to payouts because that broker is not dealing with them no more because they're not dealing with US clients anymore. So you're probably looking to switch to futures. I see a lot of people talking about this. So I had to make a video because I'm actually probably one of the guys on YouTube that's qualified to talk about this because I've been trading futures for 2007, going on 17 years. So I know a lot about futures. I started with penny stocks first, and then I did that for a little bit, and then I switched to futures. And I've been, trying to S&P 500, NASDAQ, that Dow. So I know a lot about the futures. So let me break down futures as simple as possible, because if you know anything about me, I like to make things as simple as possible. A lot of you guys probably heard the word futures before, but you probably thought it was very complicated, and it's not, guys. The best way I can explain it is I want you to just erase the word futures out of your brain and just imagine you trading stocks or Forex, okay? It's literally the same thing. And most platforms are pretty much the same. If you know how to press a buy button or a sell button, guess what? You know how to trade futures. So you have to, maybe get used to the platform a little bit, but honestly, it's the same, guys. Now, let's go to a Google definition of what is a futures contract, because that's what you're trading. You're trading contracts. So let's go. So futures contract, an agreement traded on an organized exchange to buy or sell assets, especially commodities or shares at a fixed price, but to be delivered and paid for later. Now, once you read this definition, automatically this is going to confuse you. Like, oh my God, I don't know what that even means. And trust me, I was the same way too. And it got to the point where I said, you know what, forget about the definition. Let me understand the chart, because once I start to understand that price action is the only thing that matters, I literally just ignore the definition of what is a futures contract. I mean, for like years, I didn't even know, or I couldn't even explain what was a futures contract, right? So let me tell you, you don't even have to know the definition. All you have to know is price action and pressing the buy and sell button. That is it. Okay, I don't want you guys to come here and say, oh my gosh, futures, it sounds complicated. It's not. Honestly, what's really complicated, in my opinion, is options. We talking about the Greeks, Delta. I mean, all that stuff to me is way more complicated than futures, okay? Futures is literally, the same way you trade stocks and Forex. Now, options is a little different because you're dealing with, Delta, Gamma, and then you have to have the option chain up and all this stuff. So let me break down, a couple of things that you have to know when it comes to trading futures. So number one, futures is like Forex. You have a 24/7 market, okay, where you can trade 24/7, and it's closed on Saturday and it resumes on Sunday, right? So the next thing about futures is you don't have a PDT rule, okay? Now, a PDT rule, you don't really have to deal with that with Forex. So some of you guys probably don't even know what a PDT rule means. That's usually for the stock market. But PDT rule means that you need at least $25,000 to trade stocks, right? And we are trading stocks, but it's literally trading a combination of stocks. So for example, I'm trading the NASDAQ 100. So that's a combination of 100 different stocks, right? The top stocks are tech stocks. And basically I'm trading that on the index, right? So we get to trade that, and there's no PDT rule. So we don't even need $25,000 to start. So how much do we really need to start trading when it comes to futures? So let's go to a chart real quick. All right, so mainly when it comes to futures, people trade the indices, right? S&P 500, or the NASDAQ, the Dow, right? The Russell. And, people do trade crude oil, they trade gold, and you actually do have Forex pairs, the major ones though, okay? So let's go to the S&P 500, right? The E-mini. If you look at to the right where it says day trading right here, right? That's how much you need in order to trade one contract. Now with Forex, you're dealing with one lot. In futures, you're dealing with one contract. So in order to trade one contract, you need at least $400 in your trading account. Now, this is the S&P 500. If you want to trade the NASDAQ, you need at least $1,000, okay, to trade one contract. But here's the thing, okay? I think either 3 or 4 years ago, the futures market came out with something that's called the micros, okay? The micros is basically the same product, right? But you can actually start with smaller amounts. So let's go to the micros right here. Now, the same market, right? S&P 500, instead of having $400, right, in your account. Now you only need $40. Now you see the difference, because I believe they wanted to promote futures to, more people, because honestly, when futures really started out, I mean, really the big players was only playing futures, because for you to trade one contract, I believe you needed probably at least $50,000 or $100,000 just to trade one contract, guys. So we talking about traders that had millions of dollars. Those were the traders that was pretty much able to trade the futures market because they had money, right? But now, things are much cheaper, okay? Believe it or not, back in the days, man, they had it really, really rough, okay? We have it good. I mean, back in the days, just to actually make a trade, you had to call your broker, you had to tell them the price. I mean, the commission was like, crazy. It was like, I don't know, 4 or 5 times what it is now, or even more, like 10, 20 times more. So nowadays, guys, we have it so good. This is why you have to take advantage, because I'm not saying that they will, create regulations to the point where we won't be able to trade on our laptop anymore. But if you are living right now, if you love trading, you have to take advantage of the market, because right now we have it good, because we can trade on our laptop. We have, a way to trade, and we don't have to put up a lot of capital. So right now, okay, you can trade in micros, and you only have to have $40 in your account. Now, the NASDAQ I trade, you had to have $100 in your account, okay? Now, let's go to how much you're gonna risk per trade, because this is very important. Remember, I said before, the original was $400 in your account. Now, one contract, if the market goes up 1 tick, that is $12.50 if you're trading the S&P 500. And futures, when it goes up, we call it a tick. Forex, when it goes up, we call it a pip. So when it goes up, all right, 1 tick is $12.50. The reason why this is very important, because when you are about to take a trade, you have to make sure you calculate how much risk you're putting on before you take the trade. So that is the original E-mini S&P 500. Now, remember what I told you guys, we have the micros. So the micros, instead of risking $12, okay, 50 cents, now you can risk $1.25 per tick, okay? So now with the NASDAQ, it's even cheaper. It's 50 cents per tick, okay? Now, originally, okay, it was $5 per tick. Okay, so you have to keep this in mind, because every market is not the same. Okay, crude oil might be $10 per tick, S&P going to be $12 a tick, NASDAQ is going to be $5 a tick. So you have to understand, if you're trading different markets, you have to write down, okay, how much is per tick, because you have to know, all right, I'm going to risk this amount. So this is very important. Now, another thing you have to understand if you're trading futures is the contract changes every quarter. Okay, so what I mean is, let me show you guys real quick. So right here we have the NASDAQ right here. Okay, basically I traded the NASDAQ. You see I'm up $423. Actually, the other day I made $1,500 on NASDAQ, and today was honestly I wouldn't say a slow day, but it was a setup that I really didn't want to put too much size, because it's not my favorite setup. It's pretty much a flat top breakout. The market was so strong that it just was going up, not really giving you good pullback. So I just took this breakout right here for a quick scalp, and I was up, right? So let me show you guys what I mean. So right here, let's go to chart, right? Chart settings. Now, every quarter, the chart is going to change. So right here, we had December, right? And it usually goes by these letters right here, Z, H, M, U, Z, H. So there's 4 quarters in a year, right? So you only have 4 letters, which is Z, H, M, U. That's it. So don't let this, scare you off. Oh my gosh, this is complicated. No, guys. The reason why it's not complicated, because number one, like for example, I'm gonna change it to this one. This is expired already. Boom. I'm gonna change it to this one. I'm gonna show you exactly what I mean. Now, once I change it to this one, well, it's not showing me right now, but it's usually a sign right here on the chart telling you to switch over to the new contract. Okay. So I don't want you to get scared and say, oh my gosh, what if I forget to switch over? No, it's going to warn you to switch over to the new contract, okay? Every quarter a sign is going to come up and say, hey, switch over to the new contract. So trust me, don't be scared, right? So that's that. Now, again, every market is different. So crude oil, okay, instead of being every quarter, it's actually every month, okay? So crude oil, if I'm trading crude oil, if you look at here, let's go to the settings real quick. And the reason why you have to change contracts is because, remember, futures is a market where the contracts expired. Once the contract expired, you have to change contract. So right here, crude oil, you have to change every month. And when I mean change is basically once the contract expires, okay, so right here, let's say that it's February, so it's March right here. So like right now, if I change to April, okay, you won't see pretty much anything because there's no volume on April, right? But right here, see, let me see if I show you. Hold on, let's give me a second, guys. Let's see if it shows up. Actually, April is showing up. So if I go to another one, let me go to another one, guys. Let's go to I don't know, let me see, let's go to August. All right, let's go to August, and I'm gonna show you guys what I mean. So if I go to August right here, you probably won't see any data because August is not here yet, right? So right here, you don't see anything, and you see overall, you know, the chart looks funny. So every month on crude oil and I believe gold, you probably had to change it every single month, and the indices, okay, you had to trade it every single quarter. And remember, it's gonna tell you or show you to change it. Now, what I like about the market is, let me see, the NASDAQ, let me go back to, let's go back to the chart. Let me open up an order. So let me basically put this on demo mode. I'm gonna put this on demo mode right here. And basically, I'm gonna show you exactly what I mean. So I'm going to buy the market right here. So one thing I like about futures is I can click on the chart. I don't believe Forex has this option. I used to trade Forex, but I didn't trade Forex in a long time. I'm not sure if they have an option where you can click on the chart, but futures does. So I can click on the chart, boom. Let's say I'm in the market right here. One thing I like about futures is I can actually have one click can basically give me my profit target. So right here on top, this is my profit target. And right here at the bottom is my stop loss, okay? Just one click. And I don't know if, you know, the stock market is right now, you know, I'm trading some stocks and I have to manually put in my order, manually put in my stop loss, and manually put in my TP. And honestly, believe it or not, I remember when I was trading Forex, I had to do that too. So honestly, that's one reason why I love futures, because it's one click, boom, my TP's here, my stop loss is here, and I'm in the market. So that's what I love about Forex. Now, let's talk about platforms. This right here, this platform, I definitely have to pay for it, all right? But they are here every single month. Then most likely trade is not for you, or you just have to save up some more money, because I mean, honestly, $40 is really cheap compared to if you have to open up a storefront, right? Let's say, for example, if I want to open up a clothing line right now, right, and I want to go to storefront, I'm talking about I probably need at least $20,000 up front, or even more for inventory, for the rent, for everything. So if you're complaining about $40, then, you know, I mean, come on. Since we are talking about day trading, let's talk about how much do you need to start day trading in futures, because definitely it's different from Forex. Now, with Forex, you can deposit $10 and you're good, right? But futures, you definitely need a little bit more money. All futures brokers are different, but for the most part, they are the same. Okay, so you're probably gonna need $100 minimum to deposit, but that's not enough to trade. Okay, you're probably gonna need maybe, I would say minimum $200, because if you go to the day trading right here, the margin, right? If you want to trade one contract of the S&P 500, you need $40, right? Remember, in order to trade one contract, you need $40, right? So if you want to trade two contracts, you need $80 to trade the market, right? So you're going to need $80 in your balance. So every time you want to increase your contracts, increase your size, always, you know, times it by whatever the number of contracts that you want to use. And that's how you know, okay, that's what I have to have in my account. Okay. So if you're trading the micros, which is a good thing to do because you don't have to have a lot in your account. Okay. To trade the NASDAQ, you'll need minimum $100 to trade one contract. Okay. Now, just because you need a minimum of $100 to trade NASDAQ, honestly, I don't recommend it. You should have more than that. Okay, so maybe, you know, starting off with $500 or $1,000 is probably better, okay, because you're giving yourself some type of cushion. Yes, you still could start small, okay, trading the futures, but it's not like, you know, Forex where you can start $10 and you're good to go. So you definitely still have to start with a little bit more. But a good thing about futures, they do have prop firms, and these prop firms will give you a little bit more capital. And these prop firms are regulated, so it's not like Forex where you see a lot of prop firms either disappearing or they're not accepting US clients. So this is regulated. You don't have to deal with that, and you still have leverage to trade the market. Now, for the people that want to swing trade, okay, let's go do that real quick. So if you look at this right here, if you look at maintenance, right? This is what you need to hold a trade overnight. So let's say, for example, I'm taking a trade on a NASDAQ. I think 4:15 p.m. Eastern time is a cutoff point. So anything after that, they consider that a a swing trade. Okay, it's not really a day trade anymore. So in order for you to do that for the S&P 500, you're going to need $1,180. Okay, in your trading account. So that's another thing that's different when it comes to Forex. You're gonna need a little bit more in your trading account if you want to swing trade. So a lot of people honestly mainly use this for day trading. But if you do want to swing trade, you can, but make sure you understand the maintenance when it comes to your broker. Understand that you have to have a certain amount. Make sure you know there's a certain amount so you can swing trade in your account if you want to, right? So that's what you need when it comes to day trading and swing trading. And you have to pay for commissions. Commissions not that much either. We're talking about $3 to $4 probably per trade. So don't quote me on this, but it's probably around there. Honestly, that's cheap, okay? So if you made $40 minus $3 when you're up $37, whatever, boom, it doesn't matter. Because honestly, futures is regulated. They have a lot of leverage. Like for example, let's go to crude oil, okay? Crude oil, guys, is $10 per tick, okay? So let's say I went long right here. Actually, let's go back to how much do you need in your trading account. All right, so crude oil, you probably need around $1,000 in your account, right? Now you can probably almost double your account. Actually, you probably need $1,500 if you're trading crude oil. Not the micro, but the regular crude oil emit, right? You probably need around $1,500. Now, you can almost double your account in one day. I don't recommend this, but you could do it if you get the right trade and hold it. Trust me, I did it plenty of times when I was trading crude oil, so I know it's possible. Now, here's the thing. Crude oil moves $10 a tick. So here's right here. Let's zoom in a little bit, okay? So let's say that you bought this market right here, right? Now, this price right here, guys, is 7824. Now, if it goes up 10 ticks it'd be 7834. So 7834 would be actually $100, right? Now, if it goes up, right? Remember, it was 7824, right? 78.24. If it goes up all the way here, guys, right, to 79.24, that is 100 ticks. Right? 100 ticks, we're talking about $1,000. So let me do that again, guys. 78.24, and it goes all the way up to right here, which is 79.24. That is 100 ticks. You times that by 10, that's $1,000 right there, guys. If you only need $1,500, right, in your trading account, you pretty much double your account just by that one move right there. This is why I like futures, because it has leverage. And a lot of people slept on futures for a long time. Now it's finally getting popular, but a lot of people slept on futures for a long time. I don't know why, because a lot of Forex traders actually went overseas because they did give you a lot of leverage. I understand that, but futures, they give you a lot of leverage, okay? So do not sleep on futures, because they will give you a lot of leverage, and you could actually almost double your account in one trade in one day. I don't suggest it because, you shouldn't trade like that, but I'm just showing you the possibility, and I'm showing you what type of leverage futures give you. Now, that's pretty much it, guys. I want you to either try it out, right? Try it out. You can try it on a demo. Start from there. If you like it, boom. Maybe test out a small amount, go into micros, right? Test it out a small amount, right? And go from there. But futures is definitely a market that you probably want to look into, especially if you trade the indices, because a lot of Forex traders trade the indices, okay? We trade the NASDAQ, they trade the Dow, which is the US 30, okay? A lot of people say, they come in the market and like, oh, where's the US 30? I don't see it. Honestly, the US 30 is renamed. The real name is the Dow 30, right? The Dow Jones, that's the real name, okay? US 30 is not the real name, okay? So the Dow, the NASDAQ, S&P 500, we have all that. It has the Forex major pairs on the futures platform. So check it out, okay? If it's for you, check it out. If it's not, you can, stick to your Forex broker, whatever the case is. But again, I had to break down this simple video so you can understand, and I don't want you to be scared of futures, because if you can press the buy button, if you can press the sell button, you are good to go, because it's literally you're trading the same strategies, you're trading price action, and you're just using a different platform, right? So that's all I have for you guys. If you want to learn more how I trade, link below in the description. I've been doing this almost for like 17 years, so check out the description below. Also hit that like button, hit that subscribe button. If you have any questions, comment below, because I try to answer all your guys' questions. Thanks a lot for your time, and please have a great day.